All right, welcome everybody to the client support webinar for September 20th, 2023. Great to have everybody here. All right, quite a bit of people here today, so good to have everybody here. All right, I'm going to go through my administrational humbo jumbo, and then we're going to jump into your questions. Jim, I got your question on your futures versus your toss. We'll talk a little bit about that, of course. Any questions anybody else have, feel free to ask. All right, so let me get going here. All right, first thing to talk about are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to be aware of the risk. There is risk in pretty much everything we do, right? But in the markets, what you want to do is protect yourself as much as possible. So A, you want to trade with money you can afford to risk, called risk capital. And two, know how to calculate or figure out your risk on each and every trade and adjust your trade size to keep within those risk parameters. And also too, if we talk about any trades today or possibilities, please run those by your financial advisor to make sure they're suitable for you, because we don't know your personal situation and they do. And finally, we work in a realm of probabilities when we trade the markets. So even if we have an edge, sometimes we end up on the wrong side of the trade, right? That's what probabilities mean. So you need to protect that downside. You need to do it with good, solid risk control. We can help you with this. I got a variety of books available designed for just that. Money management for traders and a trader's money management system are two that I would recommend if you're interested in knowing how to do that. We also have Elliott Wave techniques in my newest book, The Art of Trading. All right, I think The Art of Trading is going to be a great book, one of my best books I've ever written. A lot of new information, covers a lot of things that we've learned since our first book and have implemented and tested, so a lot of good information in there. All right, we're going to be using software. Many of you already own our software, but here it is. If you own some of it, but not all of it, and you want to add on to it, you certainly can do that. Just go to our website and you'll find the store in there and you can purchase what you need to. All right, so let me come out of here. All right, here's TradeStation. If anybody has any TradeStation questions, feel free to ask. And Jim, I think you have a Ninja Trader question, of course, because you use Ninja Trader. And I think what you're referring to is the connections area. So what Jim was having a problem with is here. And I notice I have my Kinetic and my Ninja Trader Continuum, but I don't have TOS or TD Ameritrade data. What I would like you to do as a first test is disconnect from your stock data, which is TD Ameritrade. So disconnect from that and then see if the futures trades load quickly. So go ahead and do that now and let me know. And while you're doing that, I'm going to talk a little bit about the ETF USO. Now, USO is one we've been recommending for a while. I think it's going to get up to around 100 to 126. That's my target on this one. And that target was achieved by a fib extension based off a 345 Elliott wave count on the weekly chart. So it's going to take a little time to get up there, but I think it's starting to work its way up there pretty quickly, okay? Probably due for another pullback at some point. The reason I say that is we're seeing on the 60-minute chart here, bearish divergence here. So I wouldn't be surprised if we come back into the 70s before going up there. So in terms of, short-term trading, if you trade the 60-minute chart, look at that beautiful pyramids on the way up. If you're trading this one, stop under here. Let it breathe a little bit. If your intentions are to make it to the target, don't have your stop set on the 60-minute chart. You'd be out already, okay? And that would have been a nice trade, but the idea is then you have to get back in to go take it back up once the correction occurs. So you gotta, again, you gotta decide if you're in this for the long term or you're basically short-term trading. And there's no right or wrong answer. It's just that that's a question you need to ask yourselves and then put your stop appropriately. So stop under here, right around the 70 mark. All right, looks pretty good to me for a correction before you have more highs. Okay, so I don't think you're going to come down much further than that because the daily chart's got a green PTF. So I think you're good to go. Now, what does this mean? Well, it means higher prices at the gas pump, right? The other thing that concerns me about this is if oil goes up, you know, the economy right now is at a critical point, and it's kind of in a recession, but it could get a lot worse. Rising oil prices usually make things worse for the economy, simply because companies depend on cheap energy, all right, to keep their prices where they are, because there's shipping involved, manufacturing of plastics involved, and things of that nature. Not only that, if people pay more at the gas pump, they have less discretionary income to pay for products, right? So it's rising energy costs usually are not good for the economy. And so if that deepens a recession even more, that could be a problem for housing and everything else. But I wouldn't be surprised if we get up quite a bit higher. Some people are calling for $10 a gallon. I don't know if it's going to get up that high, but I think you probably could see 8 again within the next, probably by winter if this trend keeps going up. Of course, it's going to correct a little bit, so it may not happen that quick, but should get up there pretty soon. So USO, okay? All right, so keep an eye on that one, because that's going to be kind of an interesting one. All right, what else? Anybody else got any questions out there for me? Any questions? Software working okay? Jim, did you try that fix that I just gave you in terms of turning off your stock data to see how your futures data loads quicker? Now, the other thing to think about, Jim, on that is simply, I don't know the specs of your computer and how many charts you have open, but all that can affect speed as well. And the other thing is, here's another thing you gotta be careful about. If you have a ton of scanners working and you're scanning, you know, a lot of stocks, whether it's the NASDAQ 100 or the S&P 500, and you've got a ton of charts open, and you're also now looking at futures, that may be stressing the system a little bit, okay? All right, so how many charts do you have open? That means it's probably not a data issue. How many charts do you have open? And then also, how many scanners do you have open, and roughly this rough amount of symbols that you're scanning for as a total? 6 charts open, okay, and on stocks. And what time frames? And how far back? So for my charts, I recommend don't go any more than 3,000 bars back, okay? Now, if you have a long-term chart, don't forget 3,000 bars is quite a lot, even on a long-term chart and a short-term, but I wouldn't go any more than that, okay? Sometimes if you have too much history to load, that can cause a problem. And this goes for TradeStation too, okay? Okay, so, you know, if you go here, go to data series, you can see my bars are set at 3,000. I don't use dates, I use bars, okay? Some people like the days back, I don't. I like to use bars, okay? And I usually don't exceed that. And it's very important to also make sure on intraday charts, for example, you know, here's my intraday charts here, like the MES, all right? So if I go days data series here, you'll see it's 3,000 there. Because if I'm looking at a 1-minute chart, I certainly don't want to have 5 years of history, right? Chart will never load. All right, so history becomes a big deal in the speed of loading things. So keep that in mind. Now, the other thing too is make sure you're not using a wireless connection. When you're dealing with your trading computers, always have them hardwired. Hardwired will be generally faster than any wireless. and a little bit more reliable, especially if the kids at home start jumping on the wireless, right? All right, so hopefully you're checking all those things out and you can't just change one chart. If you find that your days back is loading too much history, you need to check all your charts. So it's not a global setting necessarily. However, going forward, you can make it a global setting, because what you can do here is go to data series, change this, go to present and save, okay? And then that should be the default. And then you want to resave the template with that as well. So if you got the art software loading and it's that, change the dates and then just save over the old template just to make sure. So check all that stuff out. All right, anybody else? Oh, Frank, no worries, you're fine. Anybody else? For those of you that just came into the room, again, if you have any questions on any of the software you're using or any of the course information, feel free to ask, okay? Okay, so James is saying that helped. How many bars do you use on the 15-second? I keep it pretty much a standard 3,000. So if you go to data series, pretty much 3,000, just simply, I mean, you can do it less if you want, but it's just easier for me to remember when I'm setting stuff up. So here's my intraday charts. So they're pretty much all 3,000. If you feel you need more, you just add another 500 or price bars increments until you get how much you need, okay? Okay. The Fed, well, we'll see what the Fed does. I think they're pretty much going to hold pat today, Frank. Going forward, I'm not 100% sure. We'll see. As we enter 2024, then you have an election year. So election years get a little tricky because the Fed, even though it's supposed to be independent of the political parties, they tend to get influenced. They certainly don't necessarily want to cause a recession in an election year, right? Okay, so did that fix your issue there, Jim? Good. Looks like it did, right? All right. Do I use the DOM to trade? No, I don't. Okay, I don't. Usually what I do is when I day trade, I think you're talking about day trading. I usually am going off what my software tools are telling me, my analysis. And so if I want to go in, I go in. And whether I, get an extra tick or so or something really is not going to make that trade more successful, really, or not. So I just enter market orders to get in. Unless I'm watching a pyramid and the pyramid points at a certain level and prices aren't there, then you can put a limit order in, okay? The stops, all my stops are stop market orders, okay? Yes, and you can see that simply because there is my NinjaTrader Continuum account, see it? And Ninja for futures only, you know. And then stocks, I usually do through another brokerage. Okay, so Frank wants to take a look at gold. Let's just take a look at the ETF for now on that. All right, so, oh, I'm not gonna do it on a 5 minute, that's for sure. Let's go over here. Sorry about that. All right, let's do GLD over here. So here, I'm gonna open up, Frank, the weekly chart here and take a look at this a little bit more. So this was a big run up that we had way back in here in the top at 2011. And this actually was a 3, okay? Then we had a long wave 4 that ended right about here. And since then, this has been a wave 5, but none of the owls here or here exceeded this one here. So this is a 5, okay? The target zone on the 5 is, and I don't have enough history to start the top here, but it was right about here is the beginning of the long-term target zone and went up to about here. So we hit it once already, all right, but the PTF remained green. So that was an indication that, you know, you're going to have a pullback, profit taking, and now it's heading back up. So we think it has one more high to go, all right, and that's kind of what we're looking for next. So I think you can still stay long on it, okay? Interesting thing is that gold, to me, I mean, you know, in the prior decade, gold was really the place to go in terms of safety, right? Things have changed a lot. You have cryptos now, you have alternate investments, you have silver, things like that. And silver's always been around too, and that hasn't been doing so good. But, you know, a lot of times are a little different in terms of where people may take their money and put it. And I'm not so sure there's going to be that much money going into gold as in previous recessions, so to speak. I mean, it's obviously going in, okay, but I don't think it's got much higher to go. So if the market does a tremendous sell-off from here, you would certainly think gold would go up, and we're going to see it go up, no question about it. But it may not be as proportionate of a move up as we've seen, you know, 10, 15 years ago, when it was the staple for security during insecure times, recessionary times, right? So that's the only thing with gold here. Cryptos may come around and be a place people are more apt to put their money for a variety of reasons. We'll have to see how that unfolds, okay? Interest rates are higher now. People may look to put their money in treasuries and things like that more. So, you know, if you look at TLT here, which is the bond ETF fund, all right, this has been doing nothing but selling off, all right? Thank God I listened to my PTF here, because even though it looked like a bottom here, the PTF was red, and look what happened, new lows. All right, now it's turning yellow, so things are improving, but we still got red over here, so it's not done coming down yet. But the nice thing is that if this forms a bottom soon, okay, right around in this area, maybe it'll go down a little further. In fact, let's just take a look and see what we got cooking here in terms of a possibility where this thing could go. So if we draw up fibs, extensions, we're looking, this is approximate, oh, wrong one. This is approximate. So this is going to be something like this. Layer. So we may have a little bit further down to go on this, okay? So I do think TLT, once it reaches a bottom, will be significant. And if the market sells off, then that may create the bottom of TLT, and that will be a great buy. So there might be money going into things like this, okay? instead of the traditional gold. We look at silver. Silver's kind of messy. It's actually forming at this particular point a pennant, so to speak. Let me just grab a line here. So you kind of got a situation where, you know, you have that, and then a continuation of that line there. Trendline masters have already started to put that in there. So we may be getting some type of pennant forming and getting a move from this. And certainly silver, if you look at the long-term weekly chart on the far left, we may have a bottom in here. And this is just a little bit of messiness before it breaks out. Okay, so I think you got a little time. I'd like it to prove itself a little more before I jump into it. But you see, I see more possibility with silver really than gold because there's so much room for this to go up. Whereas gold, there's some room to go up, but not quite as much as this. Okay, that's kind of, you know. And what you can do is you can look at specific markets and apply the software and kind of get a feel for what you think is going to go in. Okay. All right. All right. So I did gold. I did oil. All right. And I answered that. Okay. I answered that. Okay. All right. Good. You did good on the USD CAD futures 2 days. Now I wait. I'm flat. Okay. I only see the sim account, not trading account. Well, you cannot get a connection to the Continuum account unless you have an account with Ninja, Jim. So in order for me to switch this to my Ninja account, I just would put in my trading account information, okay? I use the sim account when I'm doing webinars. All right, so that's that, that's that. Okay, and all right, let's see, SDOW, okay, SDOW, that's the inverse down, all right, notice it's down. Okay, Alexander's looking at this. All right, so yeah, this is bottoming. Frank, you're probably pretty aware about this one too, as we all are. So, you know, basically, after a big move down, if the market goes into the type of correction we think it will, all right, then this is going to go up, all right? The nice thing about the SDOW is that it's an inverse, but it's a buy, okay? And if you have an IRA account and you want to take advantage or hedge your portfolio, this is a great vehicle to do it because you can actually buy these in most IRA accounts because it's not considered shorting because you're not shorting a stock. You know, IRAs don't like that when you do that. You know, a lot of them don't allow it. Okay, so the SDOW can be your way of counteracting that right within the IRA account. All right, so yeah, is it a go now? It's looking pretty good. We got a little bit of red on the owl here, so we're kind of, you know, pulling back a little bit. I would like to see this get at least above here, okay? I would like to prove itself a little bit. This is fine long-term, got a little bit of red here, but, you know, it's very easy, especially with this market that's kind of been bouncing along to the side for so long. You don't want to get stuck, if you can help it, in this area here, okay? Because that could go on for months. So wait for it to break out and then put your money to work. All right, and that's the S down. All right, UNG. Now UNG is the ETF for natural gold. And this is one here that we're hoping a bottom is in down here. We have a long position that we took earlier in this. So we're hoping this is the bottom. But you see, now we're stuck in this mess here. All right. So if you were going to go in this now, I would wait, okay? Let's wait and see it prove itself. I mean, you got basically a top of a channel here and a low here. So I would wait for it to prove itself, because if it can get above $8, which is the top of this channel here roughly, then you should be good at least up to 16 to 23 bucks at that point. All right, so I think natural gas is bottomed here, and we'll see. But I think you got to wait for it to break out. All right, this would be considered an early trade. You don't want to go against the bearish pyramid at this time. If you got in it early, well, then our stop is way at the bottom. So the only way we're going to get stopped out is if that's not the bottom, and that's the way I like it to be. And bottom chasing is very interesting. I'll give you an example. In our day trading room yesterday, we were trying to catch the bottom of the MES, which was the ES menu, right? We had two trades that failed, okay? And three trades that failed catching the bottom. The fourth trade was a winner, but you had to really stick with it in order to get that. Now, once you have three losses, probably the best you're going to do is break even, okay, on the fourth, because the losses are just too big on three to really overcome that. So, catching bottoms can be difficult. Usually it doesn't take me 4 times. Usually I can do it in 2 at the worst case scenario. But yesterday was a tough day. We were trying to get it in within 2 hours. So that was a little different. But, you just got to put your stop at the bottom and keep it there and not get stopped out when the market does this volatility, because you could be right but not be there when it moves, right? So you got to be careful about that. All right, LNG, sorry, okay, LNG. The font's kind of small. I got a new computer and the DPI is pretty small on this thing. All right, LNG, sorry. All right, LNG, are you in this already? Okay. Alexander, are you in this already? All right, you're watching it. All right, so here's my adage on this. Okay, you got a red PTF, first of all, down here, so you don't want to be long, and I'm not so sure you got that much room left to go short. I probably wouldn't do anything with this, but again, look at the weekly chart, okay? I don't think it, let's first of all, let's see if it corrected enough for us to have a major 4 in there, because you did have a red out, but you still have to make sure it corrects enough, right? So if we take it up from the bottom here and go roughly to the top here, it hit the 15% probability range of a correction, not the 70%, right? All right, that's a tough one, okay? Right away, that makes it a difficult decision. Is it gonna make another high, or is this an A, B, C, right? And then it goes down in the 70s. So the clarity is not there. So I kind of probably would pass on this, simply for a variety of different reasons. One is, the biggest part of this trade would have been here versus here. But now you're stuck with dealing with this. And you've had a fairly decent run up, 1, 2, 3, 4 pyramids in a row. So the risk now of going long is greater than it would have been, of course, on the first 2. So I kind of would pass on this, all right? I think you can find something a little bit better than that. You know what I'm saying? All right. So let's see. What else we got? All right, I think I got that one. All right, Frank, good to have you back. All right. Watching. Okay, so let's see what we got here. Okay, so Jen said, do I do day trades on the leveraged inverses like the SPXS or XPX or SQQ on down days in my RA? I would not use those for day trades, okay? When I say use those, they're usually to hedge a position, because your IRAs are long-term, right? So they're usually there to hedge those positions until the correction's over. The long-term correction would be over. That's how I would do that, okay? So I kind of would do that, all right? That's the way I would do it. I would just trade the SP, okay, itself, all right? I would try to just open up an account and do day trading outside a IRA situation. All right, let's see. And yeah, the CAD right now, how thin that is. Oh boy. Also too, Frank, you may have some overseas accounts too. And you know, the other thing too is in terms of day trading, you know, I don't day trade stocks, and I consider an ETF a stock. I just don't do it. I find the futures market much better. But that's me, okay? But there's a lot of people that day trade stocks. I just find it difficult to go short on some and so forth and so on. And yes, you can use the ETFs to do that, and there are people that do that. So it just depends on what you want to do, okay? So this is getting near a bottom, all right? I'm thinking this is pretty good for maybe a long trade coming up, but it hasn't bottomed yet. If you look at the daily chart, we still got a red PTF, but if you look at both the daily owl here and also on the 60-second, all right, you have incredible bullish divergence. So a nice short trade, but now it's coming to an end, I think. But it's not quite ready yet. All right, so let's see. So yeah, in terms of using a particular ETF that you want to use, Jim, that's going to be up to you and your decision. There's no real right or wrong answer. I think what you have to do is kind of, you know, become proficient in whatever way in which you choose to do that. And everybody's different, okay? Everybody's different. Best thing is test it, see how you do, and do it that way, okay? Okay, good. So the toss data has reconnected on your end and the continuum is still fine. Good, excellent. So that was a history, too much data history. I'm glad we could get to the bottom of that. Usually it's one of those factors. Excellent. All right, well guys, I ran a little bit over, but all good stuff today. Really great having everybody here. All right, we'll be back again next week. Client support, of course, is every Wednesday. And if you have a problem, write down what your problem is and bring it here, okay? Like Jim did today with his data. That was good. All right. So great to have you all here. All right, any last minute questions on software or courses? Stephen, good to have you here as well. All the way from Long Island, New York, right? Frank, you're from overseas. You're quite a ways away. Good to have you here. I don't know what time it is where you are, but nice to have you here. All right, I think we did it, okay? Good session today, great questions. All right, so we'll see you back here next Wednesday, okay? All right, good to have everybody here. We did record this, and don't forget the recordings will go on our YouTube channel, but they're in a hidden area. So you need to access that through the client, the portal, you know, where you sign in with your username and password. And you can gain access to the portal at the traderscoach.com website. So client login, okay? And then you scroll down to where you see client support recordings, and there's a direct link to our hidden YouTube recordings of all of these, okay? Frank, thank you. Right back to you, okay? All right, everybody, have a good one, and we'll see you back here next week. Thanks so much for coming. Bye-bye.